Good afternoon, everyone. Welcome to the Daily Market Update Show. And today I'll be doing the show a little bit earlier, just 20 minutes before market close, because I have to go on a hike. And let's get into it. So I'll be giving you guys support and resistance levels to play off of, as well as I'll be doing a market analysis on SPY QQQ and a couple of big tech stocks. And as well, I will be giving you guys the most likely scenario going into tomorrow, as well as going into next week. And let's get into it. So let's take a look at the data today. And you can see the fear and greed index. We are at extreme greed at the moment. So a little bit cautious if you are a bull and potentially set your stop losses as well as taking some profits. And the Fed rate hike is still the same, just as yesterday. Pause for next week and hike in July, as well as CPI data is going to be on next week as well, one day before the meeting for the FOMC meeting. So that will be next week. You can see on the 14th. So the CPI will be on the 13th. And so we got our AI sentiment data now. So you can see we are very, very bullish in the market right now for sentiment. Look how big of a shift from 29 to 44.5. So this is a little bit of a red flag for the bulls. Obviously, this is the first week that we are this bullish. So the bullishness can continue. But going forward into, let's say, next week, as well as the following week, we have to be a little bit more cautious if we do continue running, because we are a little bit overbought. So let's get into the actual charts. So Tesla, I'm going to be doing Tesla, Google, Amazon, Nvidia, and Apple in S&P 500, and as well as QQ. So Tesla is running straight up to my next resistance right here. So let's zoom into the 5 minutes, see if it's how it's testing. This is testing close to that zone, and we are running out of time, so I don't think we're going to get over it. We have only 20 minutes left. And on the 4-hour time frame, so I talked about this, that the 4-hour 12 EMA is a full bull control guide for us. And you can see, so you just have to go to your indicator and turn on your EMA, which is the exponential moving average, and type 12, and then you can get this teal looking line. So you can see we have bounced off of here. Ever since May 26, we've just been bounced off of here, bounce off of here again. This is not the there's a glitch in the chart, but candle never broke through it. So we bounce off here again, bounce off of here again, and today we bounce off of here again, exactly on the 12 EMA. So that is going to be the full bull control guide for you bulls. And if we don't ever break this 12 EMA and just keeps riding it, let's say we chop around here, consolidate it a bit, let this thing catch up, bounce off of again, another leg up, pull back, bounce off of again, another leg up. That's going to be a full bull control on the 4-hour time frame. So that's going to be you guys' guide going forward. You can either take profit here due to how extended we are from the 12 EMA, or wait just to potentially see if it will go sideways a little bit while let the indicators catch up, or just set a stop loss if we do have a candle closed below the 12 EMA. Up to you guys decide, but that is what I'm currently seeing on the Tesla. So congratulations on you guys bulls, and we'll see the next level. If we do break this one, there is not a lot of resistance. You can see these volumes here after this cluster, and this cluster is pretty thinly traded here, and the only thing we'll be dealing with is this guy. So next level I'm dealing with is this point of control would be close to close to this 337, 338 range. Be the next resistance level. If we do break this today's high, that would be 324. Although we get kind of extended, so I would like to see some sideways action or a slight pullback like we did yesterday before we have another move up. But that 4-hour 12 EMA guide is as clear as it gets. And all right, let's move on to Google. Google, the weakest tech stock out of all of them due to this sideways zone being a phase where bulls were accumulating. We finally broke out after like 2 weeks, and then it was almost 3 weeks actually, 18th, 20 days. So we finally broke out, and then next thing we know, we are back in it, and we have broken that support zone as well. So this is the weakest of the out of all the big techs. The psychology behind it is that so bulls had a nice move up. Now they'd accumulate bull break out of the resistance after 2 weeks of not being able to get over it, and so that's what the bulls want to see. When we come back to retest that zone, we want to see a bounce off of that. But the bears took over and broke back into this zone and broke this support resistance level. So that's a red flag for the bulls. So the next time I see a bounce here, we are looking for a lower high compared to this high. So that's the most likely scenario on the daily time frame. So we got to be cautious going into next week, as I was talking about the sentiment of the data. So potentially, we come down here, bounce a little bit, and then boom, or we make it one more leg down, bounce, hits this area, then go down. That's the most likely scenario now for the for Google due to the size of this move. It's like the size of this move. The most likely scenario when we pull back is another bounce. Now this move, the most likely scenario, bounce is another pullback. Obviously, not everything is probability wise, so not everything always plays out in the most likely scenario. But this is the most likely scenario. If we do get a very shallow bounce, that is going to tell us the next move down is likely setting up. Amazon, the most I would say in Apple is probably the most bullish one for today. But as of yesterday as well, it sold off quite a bit, and we took out 3 days in one day, which isn't as ideal for the bulls either. You can see this is a uptrend. Now we're back in a neutral trend because we broke the pivot, which is this pivot low. And Amazon bulls also held the 12 EMA on the daily time frame. You can see we are writing the daily chart. This is a 12 EMA. So we are writing it here, wrote it here again, and we'll see when would this bounce be big enough where on the next dip bulls can buy this up, or this one's going to be shallow one and then pull back into here. Obviously, we got to break this 12 EMA on the daily as well before we anything happens. So right now it's still in a neutral trend. Now going from uptrend to neutral, we need to set a higher low like this, or this lower high. So this high is lower than this high for a downtrend to confirm, meaning we got to break 220, 120 support zone for it to be a downtrend. But yeah, Nvidia is chip chopping a lot lately, but obviously we're still looking in a, let's see if we have a rising falling wedge here instead of a equilibrium. Give me a second. Yeah, it's looking a little bit more like a falling wedge to me. So falling wedge technically is a bullish pattern for continuation. For the next move up, it's a bull flag. But due to how much we've been running, we may be running out of gas a little bit. So this is a clear guy for Nvidia, this falling wedge. So this would be the resistance zone, resistance, and likely we haven't tested again. So, and this would be support, support, support. So 3 touches means it's a valid pattern. So this is RPR visual guide overall for support resistance zones as well. And let's see, let me adjust this a little bit, see if we can. Yeah, some people draw the lines within the wicks, some put without the candles, but these are more for visual guides. So we could say this would be more valid because we can go to the 4-hour time frame and those wicks will be gone, right? Just like this. So everybody can draw them differently, but just the overall idea of the pattern. As long as the big picture idea is there, you will know it's a falling wedge. So falling wedge usually we'll see when it has a big move up and then it just chops and potentially another move up like that. So we need to see it break substantially with volume. But now, if this was a little bit like down here, then I would say potentially very likely we're going to break bull. But we are in their all-time highs and a little bit overvalued as well as a little bit overbought. So chances of us breaking this high, I would say it's a little bit low. But Nvidia is an AI, anything can happen. So I keep an open mind to just looking at the price actions, not the company itself too much to get attached to it. And Apple, surprisingly, the strongest one overall. The 2-day 12 EMA is also my guide. So you go to 2-day time frame and turn on your 12 EMA, you can see writing exactly perfectly off of it. There's like 10 touches, I think. 1, 2, 3, 4, 5, 6, 7, 8, 9 ish. Yeah, about 9 touches. And we haven't even tested again yet. And today is just all bulls today. There's a little bit of a red flag here when we rejected that and then pulled back, but still no signs of slowdown for bulls. So we're still in a daily uptrend. So this is the strongest one that is still in a daily uptrend. See, it's still continuing. There are just we haven't broke the prior pivots yet. So no signs of red flag for the bulls at the moment for Apple. So this is like the only stock that we shouldn't be shorting because of how everyone is, it's a long-term portfolio is in Apple, and like people buy this thing every month, right? They're in their IRAs and all that kind of things. So our hourly trend is going to be our guide. So we go to the hourly time frame. So we have set big enough move down. This did form an hourly downtrend with zero fall through. We broke it by like what, 50 cents? Yeah. And then the bulls took over. We are in an hourly uptrend. So that would be our guide. So the daily uptrend is continuing. And as long as we keep our uptrend and there's no red flags. And there is actually not a lot of resistance up here other than that the recent ones that we just tested. The all-time highs area, we already broke that, but we came back into it. So that's going to be our resistance guide. We do come back to test that area. So that would be yesterday's high. So we are testing that area right now, as well as this little structure here. If we do break above this structure where we rejected yesterday, the 181.2, then we're likely going to go test. This would just be the prior all-time highs, where it could potentially act as a little bit of resistance over here. Then we're testing the all-time highs. Let's go to SPY. SPY, we are chip chopping, completely sideways zone. We're under the golden pocket, which is the 0.618 and 0.65 retracement level from the top to bottom, from this top A to October lows move. We have bounced 61.8%. So under that means SPY that area will act as a resistance zone. So far, we have not been able to get over it. It's completely sideways, looking like a megaphone here. So we'll see if QQQ needs another leg up for SPY to have this significant break, unless money really rotates into SPY, and while QQQ pulls back, which we did see that yesterday. Yesterday, SPY was only down 0.3%, while QQQ was down like 1.7%. So a lot of money from tech was flowing into SPY yesterday. So hence there was not a lot of fear in the market. That's why the VIX didn't go up at all, and due to just money rotating around. That's just how my market works. Only time we get fear in the market is when all sectors are dropping at the same time. So SPY dropping, QQQ dropping, as well as all the other sectors, financial sector, semiconductor sector, IWM, right? So we have rejected that again to the tick 0.61 resistance zone right here. As well, I can see to the tick. This is a 15-minute time frame to the tick. We got rejected there, rejected right here. So that's obviously a clear resistance zone for us to watch on the SPY. And this could be either accumulation zone or a distribution zone. Accumulation zone means that on the next break we're gonna have a nice move, or distribution zone meaning this is a sell zone and they want to bring it down. So we don't know any of that yet until it breaks this sideways range. So obviously this would be our support. This zone could be our support. Does look more like I want to say it's a megaphone. The bottom support is more of a megaphone, but the top one is a straight line, so it's not just the channel. So yeah, this is the level I want to see SPY break for bears, and you guys obviously want to see us break above your bull. So we need the more key thing for me would be QQQ, right? QQQ is going to determine if SPY can actually break above here or not, and the rest won't be matter that much because it's just lower time frames won't matter as much when we're completely going sideways. Um, so the more important one is for me would be just on the daily, see which way we break on this range. We were chopping back here as well, just a little bit of a chop. Top up this range too. Over here, and just perfectly coincide with the 0.61 golden pocket resistance. So where there's a lot of resistance coincide in one area, it makes it more significant versus just, let's say we just have this 0.618 and there's nothing over here, then it'll be less significant. All right, and let's see, take a look at QQQ. QQQ is the most important one for me. I'm just going to do this real quick. I was just watching this retracement from this A to B move. We bounced to 0.618 as well on the hourly time frame, just from yesterday's top of the yesterday's move to bottom of yesterday's move, potentially to see if we do set a lower high, meaning this high is lower than this high for the hourly downtrend to continue. As of now, no signs of that yet. Bears need more volume to break us below here for that to happen. So we'll have to keep watch tomorrow. Even though Bears did play defense, we didn't get over the 0.618. We did get over 50, so that's not very ideal for them. But most ideal would be we bounce to 0.382, which would be a bear flag for continuation down. So, but you could say that Bears did play defense and we were running out of time. So we'll just have to see if they do show up tomorrow. They do have to show up right away though, because we do. Let's say we tomorrow opens and then boom, one candle up, right? Then this whole thing is over for we're coming back up to test this structure again if bears don't show up tomorrow morning. And then I'm liking looking back up here again, these levels, if bears do break above this level. That's for short term. And for longer term, I'm just going to delete this real quick so you can see better. For longer term, we are in the golden pocket. 0.618 is down here, 0.65 is up here, and we're in that resistance zone as well. And then we are looking at a 4-hour potential head and shoulders, right? So this is the left shoulder, this is the head, and now we are forming the potential right shoulder. If we do break that low I'm talking about with the hourly downtrend confirming, this will also be a 4-hour downtrend confirming if we do break this neckline right here. Kind of looks like a middle finger, but it's how it usually works, for meaning head and shoulders is an uptrend into a downtrend if we do break that neckline confirming. That's why it's a bearish pattern. But as of now, we don't have any of that yet. So if we do start coming back down, then they're starting to look more like it tomorrow. So bears did play just a little bit of defense, but not that much, not significant at all. You can see it's like just like trying to hold this level. That's it. But yeah, may definitely need more work. Other than that, still just want to let's hammer this into you guys' head that we're still in a daily uptrend for QQQ. I know it was a big drop yesterday, but wave up, wave down, wave up, wave down, wave up, wave down. We still above this prior pivot, meaning if we don't break this prior pivot, QQQ uptrend is still intact and it will continue. So if we do, let's say we come down here and break it tomorrow, then we lose the daily uptrend, and then potentially we can start scouting some shorts when we bounce. Or you can scout a short right here for the head and shoulders pattern and set a tight stop loss, because everything is going against us when we short on an uptrend. Right?